Hello, everyone. It's 8:01 Chicago time in the morning, that is. It's Tuesday, the 22nd of May, 2018. As always and forever, thanks for joining. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, allocation to risk again. Looks like we are pushing higher. The leader today is the DAX. The DAX was on holiday yesterday. DAX is up 0.69% now. We are up, but really we're not blowing any doors off of anything. The NASDAQ's up 20 and a half points, 0.3%. But also, curiously, the yen and gold are up, as well as the British pound, the cable. So that's kind of interesting. The S&P is up 3.75%. 3.75 points, almost 4 points, or 0.14%. The laggard today is the U.S. dollar, and that's why we're seeing these currencies a little higher. The Eurobond is slightly off, just 12 ticks, and the 10-year note is unched. So that's our stance, risk on, risk off stance for today, given the overnight session. As far as what could interrupt our auction today, I'm not seeing anything on deck. There's a Richmond Fed at 10 a.m., but really it's a low-tier number. Not seeing any Fed speakers, not seeing anything significant. There are several auctions this morning for bills and a 2-year note, but that's it. So not expecting a scheduled interruption of the auction today at all. And so let's move on to yesterday's plan and expectations. So we are accountable. Accountability, a big piece of the puzzle for trading. So yesterday, here's the primary scenario. The primary scenario was for the market, because we were opening in a gap at the time, 27.28. The primary scenario was for the market to sell off a bit at the beginning. Not likely to close the gap, get down to around 27.2450, 27.24 quarter was the overnight low, and then impulse up into 32.50, and the expectation is we would take out 32.50 and push higher. The next level up's 41 and a quarter, 27.41 and a quarter. That pretty much happened, but what we got was a drive on the open, which tells us that scenario 2 was the one that was correct, and that's the one I traded off of until it started to fail over and become neutral. Scenario 2 was an open, push higher, get above 32.50 somewhere, and then roll over and test lower, but still leave the gap open. Still leave an open gap for the session. Expected a double distribution profile or something like it, and I expected it to just stop in the middle. So expected overall a balanced day once we break higher. Expected 32.50 to be taken out. What did it do? Here's what the market did. This is a 2-tick Renko. Fortunately, I had to cut down on the periodicity because of the lack of volatility. So we open, tiny little test and drive, 8.5 point drive, about 10,000 delta. And then it pulls back for a test of the mid inside of the stock zone. That's an important setup. Of course, a shameless plug, but I do want everybody in there as part of the community. But I did post this live while it was running. We did end up pushing a little bit out of the stock zone, but overall, it did take out the 32.50, the 32.50 early, and it did take out the high it put in after it took out the 32.50. So we had a range extension up for the morning, and then we had news right here as we pulled back to the mid again. Fresh mid on fresh highs. Unfortunately, It blew right through, and you can see 12.25 point rotation, big impulse down, biggest down rotation of the day. Down here, this is my rotation chart. You can see the 850, 8.5 matches the 8.5 here, and so on. And so we could see that this morning, the bigger rotations were to the positive side. The lower rotations were to the negative side. So we want to be long. We want to be trading from the long side until we had an 8.5, a 12.25 point rotation down, and then reversed itself through the mid. We became neutral, but we still have a gap zone. And note where the low is. The low is where I marked it on this chart in this 2450 area. Okay, and so we pull back to 2450 on the drop. We get to 25.25, so just 3 ticks, and then we push right through the mid again, and it is just sideways from there. We end up with a balanced profile with a pretty sharp point of control, relatively high kurtosis. The thing to take away from this, though, so we have a market that gapped. We have initiative buying, so an open drive away from the prior day and from the gap. So that's an environment where you do not want to get short. And then we have the sell-off. We take it back. We get back to the SOC. The SOC is right there. We take it right back to the SOC right here, the scene of the crime, the spot from which the news had occurred. And the market just threw up its hands and just went sideways for the rest of the session around the 3250 key area. And so that's what we ended up with yesterday. And then carrying that forward, the thing is, look at this volume. The volume for the session, 785. Yesterday's volume, 798,000. I pointed that out, or Friday's volume. It's really looking like we're starting to summer trade as we rally. The volume's drying up, and overall, it just looks like it's you want to recalibrate your expectations in this environment to make sure that you're not asking more of it than it can yield. Okay, very important. So I'm back to, taking a scale at 2 points and then managing the trade from there. I don't like it, but it's just the way it is. So we closed right on top of the point of control. You notice that the VWAP, so yesterday's VWAP, point of control, and mid are in the same area. A good description of balance. We open right there. We opened at 2732.75 on the Globex session for today, last night. And then we go sideways through the Asian session. And then as soon as Europe sets off, we start the climb. And what we've done is climb up on really thin air. 84,000, 85,000 contracts for the session. Holy cow. That's as compared to 125,000 or so expected. So our volume is off by 32% in the overnight session. My calendar doesn't show any holidays. Not sure if there is one out there that I've missed, but it's really holiday-ish trading. And what we have on the overnight session is a very weak high, 39 stricken twice, and 39.25 was the high yesterday. So we have the high from yesterday, second, third. We have a very weak high and a triple top. If you look at the entire Globex session, with the point of control at the high end, high kurtosis on this distribution, on this histogram, this volume profile. So there's energy pent up near the high. I expect it to explode upwards. Unfortunately, the volume is just not there. 85, 86,000 contracts for this session. So I want to temper your expectations based on those inputs, based on the narrative I'm just talking about. I want to temper your expectations. The overnight inventory is long on price and on delta. So we expect some sort of rebalance a little bit, unless we're going to initiate again. There's a lot of news. There are a lot of crosswinds here for analysts and for those who are looking at the longer term picture of the market. The earnings picture is very strong. Crude is just really ripping and is likely to continue to rip because the inventory is just being soaked up. The supply is being soaked up, especially with this stuff going on with Iran, of course, after the U.S. Deregulates some of its export requirements for crude. So it's good for business and so on. And there's just so much that can be priced in. The market has ignored the fact that we crossed the 3% yield on the 10 years. There's still room there on the curve for growth. And so overall, the positioning is to the long side, and we see OTF interacting on the long side. Now, there's also a pretty strong argument to the short side, which did not work out. We've had short deltas winning the game for a couple of weeks, and they're just not getting paid now. And they're part of what probably will continue to fuel, is likely to continue to fuel the move up. That's more of a macro view, which isn't where I trade. That's not my time frame. But understand that today we have a high kurtotic profile, okay, on thin volume. So tune down your expectations. Just turn down your expectations a little bit on this session today, as it is pretty thin. Okay, so coming into our plan for this session, let's turn this off. Again, these gray bands are my stock zones, and there are areas where I will interact with the market. We have a gap beneath us. So if I turn on my flex levels, you'll see that there's a gap below and a gap above, and we're in between. We have a key area above at 41.25. It's not only last week's high, but it's also a key low volume node from the sell-off in February. A pretty big area for the buyers to get through. And it's likely to be a contentious area. So I was hoping that it would push through. We would get the pullback to mid and push and battle this 41.25 and see a spike through yesterday. I expect heavy volume to come through on Bookmap if we push there. If we push through there, but we were just too weak to do that. And of course, news is just continuously interrupts. I mean, I wish Twitter didn't exist for politicians. Maybe it's good. I don't know. And so that's where we stand. I just don't want all this clutter on here. But basically, this morning we're opening in range out of value. It is a balanced profile, so value is important. The value area high and low are important. The point of control means something. There is consensus here. So the expectation is for an open auction because we are opening in range, and I expect a test of value, at least a test to 36 before we start to push into the 41.25 and start taking out that weak high in the overnight, push into 41.25. And then I expect the secondary impulse, once we take out the 41.25, secondary impulse into 44.5, which is the next key area I'm watching. That would be a target area if I'm long, or it'll be a stock short area given the context. And then back. So I'm expecting this to be a double distribution profile again, that yesterday didn't work out to be a double distribution. It was until we just consolidated in the middle in the end. But I expect us to consolidate on the upper end of the range by the end of today and hold these prices. I don't expect us to test the gap area. Remember, a gap, what does a gap mean? Why do we care about a gap zone? A gap zone is an area that is untested in the most recent auction. We don't know. This is an area that remains with an unknown as to who is likely to participate there. So if you're long, it creates kind of an air pocket under your wing, and you're much more confident if it tests and pops back up. And if you're short, then that becomes an important area for the market to likely slip through to get down into 2720, which is a big area below. Now remember, I'm going to say big on a lot of levels because we are in this big balance zone. And so these areas, as we trade them and trade them and trade them and trade them and trade them, they take more and more significance. They become bigger and bigger and bigger. And that's what happens with balance, is you end up with lines that are crunched together. I'm still going to act on those stock zone lines, but they just become tighter and tighter and tighter. This stock zone here was not moved, 3250. This stock zone at 3250 was not moved. Look at where we ended up. We ended up with the point of control, the mid VWAP, all in that spot. Yesterday, it's a meaningful area, and it continues to be meaningful. Normally, when we trade through these stock zones over and over and over, they get removed because the market's not regarding this area as a test and potential turn area. It becomes an accepted area. Stock zones don't belong in accepted areas because I don't want to initiate in accepted areas in general. If you watched webinar 2 or whatever on my website, you would know that. But this is pretty important. The secondary scenario is we open, we bust through the overnight high, we break that high, and then we push to 41.25, and we find sellers that then turn over, and it's not able to get to 44.5. It rolls over, bounces at 36, and then we get to 32.5 for the key target on the short in this zone. Okay, so the continuation is likely to take us to 32.5, consolidate, test into 28.50 for the bounce, and I'd expect this profile to be somewhat thinner, small HVN, large HVN, and a large HVN down below. So that's scenario 2. Okay. All right. So that's what I'm looking at. I have not. One thing I want to mention: I haven't done a public AMA in ages. I would say probably a year. So I'm kind of losing touch with my Twitter followers because I'm also not updating throughout the day because I'm really busy with keeping up communication in the convergent trading community. But I will hold an AMA next week on Thursday. You'll see an invitation for that. You'll see a notice for that. And you could just come in and ask whatever questions that pop up during these broadcasts or anywhere else. Good luck today, and I'll catch you tomorrow. Take care.